Investors and traders, welcome to the channel Market Chat Pattern. Today is 13th of January 2024 in my part of the world, and I hope everyone is having a fantastic weekend. We are going to take a look at the key US tech stocks that we like to follow. This video might be a little bit longer than usual. It's because we have to cover quite a lot of stocks as I was not able to cover them last week. So please bear with me. As usual, this video is for educational purposes only and it is not a financial advice. So we are going to start by taking a look at the Tesla. It's been a tough and a rough week for the Tesla stock, and we have seen consecutive daily bear bars being formed for the Tesla stock on the daily chart. We can go back and see that last Friday it dropped, Thursday it dropped, Wednesday it dropped, Tuesday also a negative bar. So the question is that what is really going on with Tesla? We'll try to take a look from the technical perspective. The last time we had a look at the Tesla stock, one of the things we were looking at was this possibility that the stock might actually be moving in a channel formation, which could actually be a bull flag. So it's a flag formation. We'll find out eventually. And what is also possible is that the stock actually could come down on the daily chart and actually try to test these breakout areas where actually it broke out from around 194, 192, that region. That possibility also remains. And the other possibility is that if we look at the trend lines that I've drawn here, so one trend line from this bottom, another trend line being drawn from this bottom, it's coming into a zone around here where we have some trend line structure coming in. If we draw a retracement level from this low to the high around here, we can see the stock actually closed below the 61.8% Fibonacci retracement, which is around $220 per share level, roughly speaking, and that could have been a pretty good support level, but looks like the stock wants to move lower, maybe about $210 per share level, and even actually coming and testing these breakout areas where it actually broke from. Couple of things to actually observe here. One of the things is that whenever the Tesla stock has had a decline like this, so for example here it completed a correction, it has actually, there's been a strong rally which has followed here. It was a low strong rally but corrective, something similar around here, fall, which in fact was an ABCD pattern formation, and it has gone and actually now it's moving lower. And if we just look at from the ABCD perspective, one possibility, or one could argue, is that perhaps we have this kind of structure being formed around here as well, which could in fact take the stock much lower and actually below the low of this, and we could be looking at around 178, 175, roughly 180 to $175 per share level. And if we look at this bottom of the channel, this is where the bottom of the channel is. While that is a probability, there's a chance of happening, but in my opinion there is a lesser chance for this happening. And the reason is that if we were to take the low to low as a cycle, and if we take this low and this low and then project it from this low, kind of a cycle, we are in the vicinity where we should form in terms of time coming together here. So probably sometime next week, give or take, we'll have to give it a couple of days here and there. We should be looking for some sort of a bottom to come in, perhaps. So this is something we'll be looking out for next week in the price action for the Tesla stock, which has been under a fair amount of pressure recently, past week. And if you look at the big tech names such as Microsoft, they have done better. Apple, we'll just take a look at that as well. Amazon stock, the chip stocks, the NVIDIA, they have been through the roof. We'll be taking a look at those as well. So the question is that why Tesla, and from a technical perspective, what we're looking at. Moving on to the weekly chart. So this is the weekly chart of Tesla. Here, the price really touched you can see this gray line here. It's deliberately gray with a lighter color because it's a very long-term 200-week moving average, which I would like to be on the charts, but not to focus too much on it in general. And the reason is because these are 200-week really long-term moving average. So it's really sitting around here, which should provide some support around this area. And then the other point I would like to make is we were looking at this potential ABCD formation, which could in fact see the stock rise anywhere between $340 to $350 per share level. For that, what is really important is that this point C remains intact, so it does not get broken. Otherwise, our pattern formation would not be valid, and what it would mean is we'll have to reevaluate things. And if we were to just take this and draw a trend line, I'm gonna make the width less, so that's a little bit easier to see, and make maybe a dotted line. Okay, now I can't even see it properly. Okay, here we go. And if we were to just draw a trend line like that, just joining this low and this low, we are also getting close to some sort of trend line possible support on the weekly. And on the daily, we have already seen the key levels that we'll be watching for. So the Tesla stock over the course of last 3 weeks, ever since we started the new year, has been under pressure. And if you go and Google and read the press, there are a number of reasons, fundamental reasons, that are being thrown around for it. It could be because of personality. It could be because of what's happening geopolitically in the Red Sea, where the shipments might be delayed. And it could also be because of the price cuts happening and the competition rising, which all of these things have some validity, but that's more fundamental stuff. But again, Tesla stock, this is the way it actually moves. If we look at its price action, it does move quite a bit, both on the upside and downside, and this is what we have to actually look at. Okay, so we'll just move and take a look at Apple now. Okay, here we go. So this is the daily chart of Apple, and here the subscribers who had been watching our videos will know we were actually looking for the price to get down to about $178 per share. It came pretty close though, because that was a 61.8% Fibonacci retracement. But we did mention that there was a chance that this $180, because it's 1.618 expansion, might actually also provide a bounce. So we have seen the price move higher. There's still a chance that actually this could actually move anywhere between 178 to, in fact, 172. But we'll keep on watching it, and perhaps this happens to be a pretty good low. That's also possible. And the reason we were watching for as low as $172 was because of the symmetric moves here. Those have served quite well in the Apple stock. And just taking a look at the longer term weekly chart, what we can see is this $128 per share level. This is a really strong point. Look at the number of Fibonacci ratios which are actually coming here. So yeah, sure, the Apple can actually pull back. In fact, it could be a bigger corrective pattern, and the reason is that on the weekly chart, this $200 per share level, which we had actually forecasted way in advance, because we have a number of patterns being completed here. We have this ABCD highlighted in red, where the CD leg has extended by 1.618 of the AB leg, and then we also have 1.272 expansion coming, and then we also have this expansion of this A to this, where this had bottom around here, this swing coming as well. So we have quite a few things coming here and aligning, and whenever there is a confluence of two or more ratios or patterns coming together, that is a point we need to really be paying really close attention to, because those are usually strong support or resistance levels because of the harmonics. Okay, so we have just covered that. Let's actually take a look at the Microsoft. So the Microsoft stock, this is daily chart of Microsoft. It has done really well for the past week. And after hitting this $381 per share level, which was the 1.272 expansion of this swing, let me actually try drawing this so that's easier to see for our new subscribers. Here we go. Welcome to the channel, by the way. And it just went sideways for quite a while. So this is 29th of November, and it just took all this time into the new year for it to begin to move higher. Now we do have a level which is higher. There is a possibility that on the weekly chart, we could be in fact looking at $400 per share for Microsoft, which is not too far away by the way. And look at how strong the past week was. So Microsoft is a fantastic company. We were getting really bullish on this stock while it was making a low around here, especially towards the end of it. And then of course the 38.2% Fibonacci retracement caught this low, and we have had a fantastic rally. Now let's take a look at some e-commerce related stocks. So take a look at Shopify. So this is the daily chart of Shopify, and I don't even recall for how long we have actually been waiting for this $80, anywhere between $78 to $80 per share level. And that was because this 80, roughly speaking, the $80 per share level is the 38.2% Fibonacci retracement. So we'll take a look at the weekly charts more clear over there. So when the stock was forming this ABCD pattern formation here, the earnings came out fantastic, and that was really bullish for the stock, and we were bullish for the stock. And what we were looking at was the possibility of actually going for 38.2% Fibonacci retracement around $80 per share level. And this we had to wait quite a bit, and there was a chance here when the stock pulled back at the beginning of the year that we might not get that, but we did in the end, and that's really good. So here we go. That's the 38.2% Fibonacci retracement. Here we go. And a strong weekly close for the stock. Now it has met our target, and again none of this stuff is for it's only for educational purposes, not financial advice. If someone is long, probably the best thing is to remain long, but tighten up the stops, perhaps even use the trailing stops. So we are now watching the price action in the stock and look at how nice the bottom was being formed around here. But this 38.2% Fibonacci retracement, a real test for the stock as well, because if it begins to close above it in a convincing way on daily charts, and we like to take a look for this stock at least 3 consecutive good close above this level, then we think the stock has much more upside. Okay, so let's take a look at now Amazon, the really big company of e-commerce, and here we go. So this stock was stuck. One of the things about the stock is that Amazon likes to make double tops and double bottoms. When Amazon was moving to this roughly about $80 per share level, we were covering this stock as part of our this segment. We were really going about it that okay, we have several patterns being completed around here at this level, and this also happens to be a double bottom, and in fact we wrote it down, potential double bottom with the question mark, and it has been a double bottom. So one of the things is that the stock actually goes into range it becomes a range bound. So look at this. This is a mini range inside of a bigger range, and we have a top here, a bottom here, a top here, a bottom here, a top here, and finally breaks out of the range. And what does it do? It forms some sort of a top here, it forms a bottom here, a bottom was around here, structural support, then middle of the range, double bottom again, double top, and then a bear move starts. And what did it do? What it did do now? It just formed a double bottom around here. And if you look at this entire price action, it is nothing more than a really large trading range. This is what the stock has been doing on the daily chart. So let's take a look at the stock from the weekly perspective now. So here we go. So this is the weekly chart, and what we can easily now see is that it has actually closed above this high as well. And from a momentum perspective, it is getting stronger now because the 20-week moving average, which is this blue line, is above the 200-week moving average. So that's good for momentum. It closed above on the weekly range, above the 61.8% Fibonacci retracement. Looks like it is heading for $165 per share level, which is 78.6% Fibonacci retracement. The chances are it's only $10 away. The momentum could actually carry it up there, and then we'll have some structural resistance coming on the left hand side as well. So the 78.6% Fibonacci retracement could be a real test for the Amazon stock. Okay, let's take a look at the next stock. Okay, so let's take a look at NVIDIA. So this one is really interesting. So let's take a look at NVIDIA. So this is daily chart of NVIDIA. And this is the stock which has really been powering the artificial intelligence or breakthroughs in that, and artificial intelligence becoming more mainstream has propelled the stock because of its GPUs, which is really the kind of power you need to make the machines learn by doing several computations. You can read about it. So here, the $500 per share level was kind of the level we had been watching for a long time, and I'll show that more on the weekly chart. And we thought that because of certain pattern formations being completed there, and especially this big 1.618 expansion, that it might actually retrace 38.2% Fibonacci retracement to fill this gap around here. Now, the fact of the matter is that in fact it did do that, but not to 38.2% Fibonacci retracement. It did not fill in the gap as well, and we have this little close to ABCD formation around here as well. Here we go, not a completed ABCD, and it just went into a trading range for quite a while and finally broke out of it. The chip stocks in general had been performing really well the past week. And let's take a look at where it is actually, what are the levels around where it is trading. So if I were to, I'm gonna just take this level here, because this is where these two bars have been closing, and this bar, although went a little bit lower, but it closed in pretty much a little bit above this level as well. So this level is pretty strong. So it seems to be between the 1.272 and 1.618 expansion. The high has been $553.46, $563.52. You see 1.618 expansion is pretty close, and again looks like the stock is going. It had a really tight trading range last Friday, and before that the candle is also a there was a fair amount of movement, but look at the close, there was quite a lot of fight between the bulls and the bears. So interesting pattern formations around here. The stock has moved quite a bit in quite a short time. This is the weekly chart. So there is a roughly drawn ABCD pattern formation. which also completes around where we have seen the 1.618 expansion. So this $567 per share level, it's gonna be a pretty interesting level to watch. And you can see I've written 500 strong resistance for NVIDIA. I'm going to delete that because it has surpassed that. And of course, this if this move is extending, then what we are looking at is this big ABCD extending by 1.618, which could in fact take the stock as high as roughly speaking $620 per share level. So this is what we are watching in NVIDIA, a very interesting stock movement taking place in chips last week. Now let's take a look at Netflix. Here we go. So this is the daily chart of Netflix. The stock finally reached our level of $490 per share level, and it's not doing much, to be honest. It's just it is trying to creep higher in this wedge formation. Maybe it might just keep on pushing the upper boundary for quite some time, but yeah, we have a completed pattern on this one. Okay, so this is NVIDIA. Let's take a quick look on the weekly chart as well. And on the weekly chart, here we go. 61.8% Fibonacci retracement. It's just testing these highs. Now, very interesting. Let's take a look at RBLX. We really like to take a look at RBLX because it's related to metaverse, so that's another theme. Now here, this is the daily chart for RBLX. The price action in RBLX for us had been rather disappointing because we were looking for the stock to rally to about $50, $60, $60 per share level, and it just broke down badly when the earnings had come out in August last year. Since that, the stock has actually rallied quite a bit, but it's in a range which is more visible on the weekly chart. So this is where we are on the weekly chart. You can see the stock is in a trading range. Those of you who are familiar with the Wyckoff work, which was fantastic work done in the I don't know, about 80 years ago. It was when Wyckoff had published his work in 1930s, 40s. I might be wrong on that. You can Google about it. One of the things mentioned about this is like a coiling spring when the accumulation is taking place. So when I take a look at this formation, it looks like there is a fair amount of accumulation taking place, and this has gone into a trading range for a really long time. But just doing our ABCD analysis, one-to-one price projection, we are looking about roughly $56, and then the 38.2% retracement comes around $67 per share level. So this is what we are looking at. RBLX for the metaverse theme. Now let's get back to crypto. Okay, so in this video, I'm not going to take a look at the crypto assets in the sense the Bitcoin chart or the Ethereum or Solana. Those are we'll start a separate segment for those. But what I will take a look at is basically Coinbase, which is a stock, but it's also a crypto exchange. And with the ETFs being approved recently last week, it is very interesting and actually really important to also take a look at these bigger exchanges as well, the ones which are trading on, which have been listed on the stock exchanges, because this is where these bigger players who have actually issued their ETFs will be doing their transactions, and these exchanges should give us clues into some sort of, from a price action perspective, because these should be generating commissions out of their trading, etc. This is how I am thinking. If you have more thoughts about this, please do put those in the comments. And here, one of the things we were looking for was, it's actually more visible on the weekly chart. Here we go. Coin rallied up to the 38.2% Fibonacci retracement of this IPO high, on the weekly level is actually closing lower. Now, with the ETF news being out of the way, one would have thought it might have a positive reaction, but it did not. So that is one thing to note. But the previous week, not last week, but the week before, was also bearish for this. So this 38.2% Fibonacci retracement is providing some resistance. And also, if you look at these red lines, this is the symmetric moves. Not 100% move yet, because 38.2% was pretty strong for it. Now, taking a look at from a support perspective, we are approaching the 38.2% Fibonacci retracement of this swing. And if we just take this one, we are yeah, maybe 50% of this, which I've not drawn here. So it looks like we could have some structural support coming in from here, which is very close to this 61.8% retracement on the smaller swing here. So between, and that is also going to be 50% of the bigger swing. So it looks like $113.50 is going to be the kind of area of interest where we could find some good support coming. And of course, we have the 20-week moving average also creeping up higher. So this is what we are taking a look at for the Coinbase stock. IBM, let's take a look at IBM, because IBM is pretty interesting. IBM is a really old company. It's an old tech, the big blue, as it's being known as. And one of the things about the IBM is that it's kind of trying to revive its kind of image, or the technology that IBM has developed is used in a lot of things in the background, kind of in the infrastructure as well. Things that we might not know too much about, but our browsers or the technologies which are being used to run the websites, etc., might actually be using some of the technologies owned by IBM. For example, a few years ago, they had actually made an acquisition for Red Hat, which is basically the Linux operating system kernel, and it is used as a server for running many things. So certainly this stock needs to be on our watch list as well, and it also pays a really good dividend as well. And now the movement in this stock is not very easy to follow, because look, it's just really squiggly. Look at this. Ever since the COVID, it's just going up and down, up and down, up and down. One of the things that we were watching for was this pattern highlighted in pink. This is right at the 61.8% Fibonacci retracement, and we have the ABCD pattern completing higher, a little bit higher, about $10 higher. So the stock is actually trading somewhere in between these levels, and last week you can see the stock had a pretty good rally as well. So maybe it just becomes range bound here. So what we'll be watching for is basically some sort of retracements to come in this stock, and whether it's going to give us a good opportunity or not. So for now, we will be just watching this stock and keeping it in our watch list. So apologies, really long video, approaching about half an hour, but I think we had a video due for the tech stocks, because we missed the updates on this last week. So I do apologize. So thank you very much for watching the video. If you like how we look at the stocks and how we do our analysis, technical analysis using Fibonacci ratios, extensions, expansions, projections, then please think about subscribing to the channel, and if you do, then hit that bell icon button. That way you will know when the new videos are posted. And if you also happen to like the video, then please do click on thumbs up. That is just a direct feedback for me, that people who actually watch this my videos, they actually like those videos. It just encourages me to keep on bringing more content for you guys and keep on making these videos. So thank you very much for watching the video. Good luck and good trading, and have a fantastic weekend. Speak to you guys soon.